Good morning, traders. It's 8:01 a.m. Chicago time on Friday, the 9th of September 2016. Happy Friday. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight news flow dominated by some poor numbers across the board. The key element here were the French numbers. Most of you who've looked at the overnight chart for the S&P futures, for example, have noticed that it went sideways through the China numbers. China's consumer prices slowed sharply. CPI rose 1.3% year over year in August, down from the 1.8% clip seen in July. The deceleration was largely a result of pork prices growing at an annual pace of 6.4%. And then when you look at the releases from France, France's July industrial production was expected at plus 0.3%, came in at negative 0.6%. This is month on month, year on year. Expected plus 1%. It is actually down 0.1%. The July manufacturing production month on month was expected at plus 0.7%. They actually got negative 0.3% month on month, and then year on year, it's at 1.8% expected and 0.4% actual. So overall, not so great. Pretty decent move down in the overnight session. We'll go over that in a minute. As far as what else is on deck, a bunch of different stuff. Wells Fargo got hit with a fine for 185 million after Los Angeles prosecutors found 2 million accounts that were created that were not authorized. And then Wells Fargo is a big piece. It's the largest bank by assets, so that could potentially have an effect on the financial sector within the S&P 500, and that's why I mention it. As far as what we're expecting today, looking ahead, we're looking for U.S. wholesale inventories month on month at 9 Central, 10 Eastern. It's an hour from now. For July, the expectation is 0.1%, 0.1%. Wholesale trade sales comes out at the same time, expecting 0.2%. And then we get the Baker Hughes rig count at noon Central, 1 Eastern. And then other than that, we had Rosengren already speak in Boston, and then we're expecting at the open half hour from now, Fed Speaker Kaplan, who is a non-voter hawk, speaking in Austin. And then other than that, the deck is clear for the rest of the day. I want to remind you again that all prices that I'm discussing are going to be December prices. I've already rolled. I rolled yesterday with the exchange with the official roll time and date. So when you see these charts, just remember that the prices may not look to you to be familiar because I'm not looking at September anymore as of yesterday. I posted on Twitter. If you're not following, it's twitter.com/futurestrader71. I posted the corrections between December and September. This September prices have to be adjusted, for example, to December by subtracting negative 6.5 points from all September prices to equalize them with December. I also posted prices adjustments for the EMD, the NQ, the Russell, and the Dow for your convenience. Also remember, this starts rollover from a week from today. We have quad witching Friday and expiration. Between now and then, I want to caution you to the use of volume delta and looking at volume. Volume should rise or is likely to rise through the week as positions are rolled into the next expiration. This is normal. Here's what we expected yesterday. Yesterday, when I did the Trader Bite, which was pre-recorded, the market was actually trading at the prior day's point of control at about 2178. The overnight point of control was at 2178. The overnight point of control was not it was very thin because of the December rollover, but still valid. But by the time the market opened, we actually were trading somewhere in the 2175 area, a lot lower. And so that changed things quite a bit. The primary hypothesis yesterday, as you see here, was an expectation of a test, a choppy open, because we're opening right in the point of control, a test down to look for buyers, and then I expected the market to rotate up and start pushing out of the balance we've had over the last couple of days. That didn't happen because we actually opened down here. We ended up having the same sort of shape, but it didn't quite play out that way. It played more towards Hypo 2. Hypo 2 was looking for a test higher, potentially a failed auction against the prior day's high, which is right there, and then a rotation back down to the old 72.75, which was 79 and a quarter in the old contract, in the September contract, and then was looking for a bounce later in the afternoon. We ended up getting the bounce later in the afternoon. We ended up testing lower just like we did. As you see here, I drew the lows of the prior days to show that the market's one-time framing up, and the trend being solidly up since the gap up last Friday on the non-farm payroll release. So this is the continuation of that reversal. Before that, we had one-time framing down. We were one-time framing down until Friday, and that trend was down like that. And that's where we ended up changing things. And I was looking, and I talked about the strong potential that we would get stuck at the MC point of control, which we have, and I was looking for an upward skew, and then came in Monday the expectation that we would pull back base and start moving up, and that's why we had the not Monday, 2 days ago, Wednesday, and that's why my primary hypothesis yesterday was for continuation higher. The expectation is we're likely to continue this pattern upwards. However, the market actually broke that by opening lower yesterday. Here's what yesterday looked like. Just a very, very balanced day. The first thing that should catch your eye is this Gaussian but highly high cortotic profile, a high fat value area. Lots of energy here. This profile actually just barely got its point of control inside of the prior day's profile value area and was essentially imbalanced. We did test lower in the morning. We broke the one-time framing up that I was just talking about. And the expectation for yesterday, one of the things it did not accomplish that was expected was that we would go neutral at some point yesterday. But having tested down, then up, higher, low, the expectation into the close was for a test higher and then a rotation to finish somewhere in the middle. Those who attended the Stage 5 AMA, private AMA that I did yesterday, got a view on the logic of why I would expect it to push higher. The AMA actually ended about right there. And so instead, the market ended up selling into the close a little farther than I expected. I did expect to run up into the close like we've had over the last few days. But overall, this was, again, a very high kurtosis in a key area, which is the MC point of control. We love this area. We've traded the heck out of this price. Again, that's 79 and a quarter in the old contract, and 72.75 in the current contract. The difference between them 6.5 points. And now what we've got overnight is the break So we went from balance to imbalance overnight. The overnight profile shows multiple distributions. This is a trend type profile. The range overnight is wider than usual. It's about 14 and a quarter points. That's not normal for the overnight session. We're not going to pay attention to the volume. The volume's only 53,000, but then again, a lot of people are still trading the September contract. The September contract has, what do we have for volume there? Oh, this is not updating. The September contract has 268,000 contracts. That is much higher than what is normal for, or what is common for that contract. Remember, 210 is expected to be common. Lately, we've had somewhere between 128,000 and 175,000 contracts. So there's a fair amount of participation, and volume is rising fairly quickly. As I'm speaking in the September contract, we're at 168.5, pushing 268.5, pushing 269,000 contracts. There's a lot of participation in this. This is an impulsive move down. There has not been the pullback, and we have not seen the continuation or expansion move yet. And it changes my homework entirely from last night. So when we look at this and we look at where we've been, here we go. So going back to, let's just look at price. Going back to the September 12th or July 12th gap up, which is where balance began, all the way to yesterday, you can see that we've been in this range of about 50 points for about 2 months, which is really, really, really tight. It's normally much bigger than that, and what we've done is basically traded the heck out of this this MC point of control right in here. The MC point of control is right there. You can see there's a fair amount of balance right here, a fair amount of balance right there at that same price. We've traded this price a ton, and now we're breaking lower, currently trading 2159.75, with the low of the session being down at 2157.50 or so. So as I bring back the noise here, the levels, we see that we actually got to those targets that I mentioned earlier this week. So what we did was, here's our pivot day for a one-time framing. Here's the break of the one-time framing down, and then we're starting the one-time framing up. Right? So we've got this one-time framing up. You'll recognize this drawing from yesterday's. Oh my God! From yesterday's video and the channel that we have going up. And the idea was one-time framing up continues as long as we don't break 2171. And yesterday we opened lower. We opened at 74.25, and we broke the one-time framing up. And then the expectation is for chop and attempt higher, and then for the market to resume the one-time framing down now. And then the target for that was 2160.25, which is basically where we are now. So this changes things a little bit. So the expectation this morning is for a continued push lower. The target below is right there, the LVN, which is in confluence with this MC point of control from the last time we were in balance. You can see the date range there, July 14th till August 4th, and there's some confluence there at the 2154. The expectation is for the overnight session, which was chop, 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 break lower, and holding right now. And the expectation is for it to pull back a little bit, become responsive on the open, and then continue lower. And that's what I'm expecting the market to do on the open, and that's your primary hypothesis there. I am looking for responsive buying, but I'm expecting that the responsive buying would meet with sellers. A responsive that idea becomes weak above this 2166 area. If 2166 gets breached and the market is holding against it, then it's likely to be responsive into yesterday's range. In either case, today I'm expecting for the first 2 hours for the intermediate time frame to be active, and then for the market to just go dead later in the afternoon. So that's your primary hypothesis. If we do extend this in the next 15 minutes, if we do extend this overnight low lower, then I'm looking for it to try to push lower, find its buyers, balance, and then become responsive and start to target 2166 for a pullback, and then we start to move back towards yesterday's range. That is hypo 2. Okay, so if we get this test early down and we get a base, then there's an opportunity to get long, and there's a potential for about 10 to 12 points in for targets on that long, and that's what I would be looking for. Okay, one last thing. The public AMA is next Thursday. Next Thursday is a public AMA. You'll see a link go out on Twitter. The link will also be on the video, in the video descriptions for today. I'll add it today, and then it'll be in every day's video. It'll also be on the Stage 5 Trading Trader Bite page. Just sign up, submit your question, be a part of the discussion. The whole purpose of my existence is to create a focused, dedicated environment for traders to grow as futures traders, and also as equity traders. A lot of this stuff I'm covering can be applied to equities. And then one last thing, so AMA next Thursday, and then one last thing, please hit the like button as you're leaving. It doesn't cost you anything. It takes a few seconds. If you don't see it on the page because you're on the Stage 5 page, just go to the bottom right, hit the YouTube button, which brings you to YouTube, and then hit like, the thumbs up. As you're leaving, it's a small action on your part, but it does make a difference to me and the quality of service and responsiveness I get from YouTube. I'm very, very, very small fish compared to everyone else on YouTube, but still, when I put in a support ticket, I do get more attention with more likes. Anyway, give that a shot. I appreciate you listening. Take care and have a great weekend all. Take care.